All right, why don't we start off with the president-elect? We just played a soundbite from him earlier. He's been saying drill, baby, drill since he's been on the campaign trail. When we look at the broader energy sector, in your mind, what does that mean?
Well, look, I think certainly he has a policy to try to increase, domestic output of oil and gas for sure over the next, several years during his administration. The early signals from the producers out there is that folks are not planning to do that in 2025. We don't have all final budgets yet, for next year, but there's some companies that have kind of reported initial indications of spending, and it certainly looks like it could be kind of flat to down in terms of U.S. capital spending in oil and gas in 2025. And really, the issue is that oil prices have been quite weak over the past several months, while service costs in the field have been kind of sticky and remained a little bit elevated. So returns have suffered a little bit, and producers are not looking to get all that aggressive on the oil side. Gas prices have clearly done better in terms of natural gas, so we could see some pickup activity there in 2025.
All right, so Leo, you laying out a lot of headwinds there, but certainly in any sector, despite headwinds, there are some opportunities. Can you give us some of your top picks in the energy space?
Yeah, so look, generally speaking, over the last month or two, we have favored natural gas focused equities. Those stocks have done quite a bit better. One that we like into 2025 is Coterra Energy, ticker CTRA. The company actually offers a mix of oil and natural gas, gives you some really nice gas leverage next year. Again, we think there's a decent chance that gas does better than oil in 2025. Really nice dividend, which we think grows next year. Fairly aggressive buyback program, and they're going to grow production at a modest rate. And they've generally outperformed production targets. So that's one of our favorites. In terms of the oily names, look, these names have been beaten down very hard, as you guys have pointed out, particularly in the month of December. We do think some of the oil stocks are poised for a bounce as we roll into the first part of 25. We think some of the real losers here in 24 could get bought early in 25. Two names we favor there are ConocoPhillips, COP, and Diamondback Energy, ticker FANG. We think both names have come under significant pressure. Both offer significant returns of capital to shareholders in terms of dividends and share buybacks. Pretty good balance sheets here as well. So we think those names are poised to do better in 2025.
Leo, I do want to ask you, we've seen a big rise in bond yields. You just mentioned dividends. In some cases, there's some areas of the market that are attractive because of the dividends when they're not getting that much competition from bonds. So two questions. Is the rise in bond yields, is that making oil and gas stocks less attractive, at least for those that really depend on the dividend to attract investors? And I'm looking at the earnings estimates for next year. It doesn't look great, including Q4. I don't want to just jump ahead to next year. Q4, 27% lower year over year, according to LSEG. Now look at Q1 of next year, 9.5% lower year over year. When you look at this sector, is it, in your mind, is it a difficult investment just looking at these earnings estimates?
Yeah, look, that's clearly going to be a headwind at this point in time. Obviously for fourth quarter, it's largely kind of baked in. Commodity prices are largely set. You've got a week to go here. But look, there certainly could be, a small upside surprise, for the commodity in 1Q. We'll see how that plays out. The oil markets have been lending bearish for quite some time here, the last several months. And look, they could be modestly better. I think one of the keys in the first quarter could be the return of more significant sanctions on some of the largest global oil producers, most notably Iran. You've also got Russia and Venezuela. And Trump might put a lot of pressure on all these countries here after he gets in office towards the end of January and early February. And that could offer a bit of a boost to oil prices. Look, I think there is a strong probability that earnings are probably still down a little bit year over year. But I think a lot of these stocks have seen an extremely bearish bent, and it might end up being a little bit better at the end of the day.
All right, so you're seeing potential for an upside surprise when it comes to some of these earnings.
Yeah, I think that's fair. I think, look, earnings is pretty much predicated on what commodity prices do. It's the largest driver. So if oil prices weaken considerably, then earnings will be, fairly ugly in the first quarter. But we think there's a chance that oil might do marginally better than people expect in the first quarter, which could help a bit. But look, at the end of the day, oil prices are certainly difficult to predict, but we think first quarter could see some volatility here and perhaps a little bit of upside.